All right, hi everyone. We'll be starting shortly. I just want to make sure you can hear me loud and clear and see my slides as well. You should be seeing the first page of the slide presentation slides, breaking news and setups, brought to you by IronFX. All right. Okay. Hi, everyone. Welcome to today's webinar series brought to you by IronFX. So today's topic is going to be on breaking news and setups. We'll take a quick look at what are the key news events that are coming up today and tomorrow, and we'll also look at US retail sales, which were released yesterday as well. All right. And then we can see, then we'll dive onto the charts on TradingView and see where the current resistance and support levels are and where price could potentially move. Later on for the rest of this week. All right. Okay. Right. Do take note of the risk warning that comes with trading Forex and CFDs, right? The products on IronFX are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Right. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Also, do take note of the disclaimer. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. All right, my name is Ketan Ramachandra. So this webinar series is brought in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so just a simple agenda for today. We'll quickly cover the US retail sales data that was released yesterday. We'll look at unemployment claims coming up today in a couple of hours. Or well, rather in about 3 hours, 3.5 hours, and we'll have UK retail sales as well. That's tomorrow. All right. So we had US retail sales being released yesterday. So as you can see, after a slump in October, for the month of October, retail sales have grown steadily in November and December as well. And especially with December's numbers coming in much stronger than the forecast. So when you look at core retail sales and the headline retail sales, it was a very strong number as well. So this was released at about 1:30 p.m. GMT time. And we did see the dollar index move higher following the news release. So stronger retail sales shows that the US consumer is still strong despite higher inflation. So spending power has yet to be curbed due to higher inflation, and we still see the consumer trotting along quite well. Right, so overall, US retail sales have been pretty strong for most parts of, rather over the last 12 months, right? And which signals the consumer is still strong, right? So strong consumer spending will naturally flow back into the economy, and that should keep the dollar elevated as well. All right, up today at 1:30 p.m. GMT time. Do take note, I'm on my calendar here is showing is on GMT time. This is from Forex Factory. So unemployment claims we had last week's. This data point is released on a weekly basis. So we had last week's data point coming in much lower than the forecast. We had 202,000 claims, 202,000 claims versus the estimate, I believe, of 205 or 209. So when you have the actual claims number coming in lower than the forecast, this typically would function as a bullish catalyst for the dollar index. And conversely, when this claims number comes in higher than the forecast, this would typically act as a bearish catalyst, right? So that's how we can interpret the data. So as you can see over the last few weeks, claims have been coming in lower than their forecast. So that means that less people filing for unemployment benefits, which translates into the US labor market being robust and resilient, right? So that naturally translates or typically translates into a higher dollar, right? So this is how we can interpret the data. So for this week's forecast, we have a forecast of 206 claims. Data is going to be released at 1:30 p.m. GMT time. So that's in about, I believe, 3.5 hours. So if we get actual data or actual number of claims that come in more than the forecast of 206,000, this would typically function as a bearish catalyst for the US dollar. Why is that the case? So when you have more people filing for unemployment benefits, it could signal that the US labor market is starting to show signs of cracking, right? So that means when you get more claims than expected, this is typically bearish for the US dollar. So that means currency pairs such as the euro, the pound, Aussie, Kiwi, and of course commodities like gold will rise. Conversely, if you get a number that is much lower than 206,000, this means that there are less people filing for unemployment benefits, which then translates into a robust labor market. Then that is typically going to function as a bullish catalyst for the US dollar. So that means the euro, pound, Aussie, Kiwi will fall and gold prices would typically fall as well, right? So this is how we can interpret tonight's data as well. All right, and coming up tomorrow, we have UK retail sales. I believe this is 7 a.m. GMT time. Do check out that, do take note of the time again, but I do believe this is at 7 a.m. GMT time. So we can see UK retail sales has been pretty much mixed, right? It's been pretty choppy. We've seen months of advances as well as months of declines. And we have seen sales stagnate as well in May and as well as October. Okay, so November's reading was the highest in quite a while since November's reading was the highest, highest matching December's gain of 1.3% month over month, right? So, but however, we can see December's forecast coming in at a decline of negative 0.5%, right? So you can clearly see that the UK retail sales on a monthly basis has been pretty choppy. Now, how can we interpret this data? Right. Should we get a surprise gain or increase in retail sales figures, that means we get a figure perhaps, let's just say 0.1 or 0.2% versus the decline of negative 0.5%. Now, any positive result is could potentially function as a bullish catalyst for the pound. That means we could likely to see the pound dollar in that instance move higher. But if the sales figure comes in worse than negative 0.5, say it comes in at negative 0.6, negative 0.7, then this is going to potentially act as a bearish catalyst for the pound, and we could see the pound dollar fall pretty hard as well. So this is how we can interpret the UK retail sales data that's coming up. As you can see, it's clearly been choppy. There's no clear trend, or at least on a monthly basis, with regards to consumer spending in the UK. All right, okay. So with that, let's move on onto the charts, onto TradingView, and let's see where the key resistance and support levels are. Right, I'll go through the majors, and I'll look at gold and oil as well. But if there is any other currency pair or commodity or even the indices that you would like me to cover, please do let me know in the chat box. I'll be more than happy to go through the analysis with you. All right, so let's move on over to TradingView. All right, okay. So here I am on the 4-hour time frame. This is the chart for the dollar index, right? So as you can see, since the beginning of the year, or rather the end of December, the dollar index has been in a relatively strong bullish trend, right? Rising from about 100.50 all the way to a high of 103.70 yesterday as well, right? You can see the dollar has been in a pretty strong bearish trend, but of course we did see it consolidate in the first 10 trading days of January, right? Sort of consolidate between 102.10 and 102.10 and 102.70, right? Roughly it was ranging sideways between 102.10 and 102.70 for the first 10 trading days of January, and it has finally broken out, right? This is due to a lot of pushback by Federal Reserve officials, right? We had several FOMC members and governors pushing back against interest rate cuts. They're saying it's too early to think about deep cuts, and they would like to see inflation continuing to fall. So all the interest rate cut expectations that were building since December of last year have started to now push back, right? People are starting to moderate their views on the expected interest rate cuts, and that's why we've seen the dollar index break above this resistance at 102.70, and it's climbing higher, right? So the trend for the dollar index does seem to the upside, but do take note, of course, nothing moves up in a straight line. So that's why we do see a strong support for the dollar index at 103, right? Why is that the case? Right, if you look across at this level here, right, we can see price making a pretty significant swing bounce here on the 3rd of December. And of course, when price broke underneath it and coming back up, it ran into resistance here as well on the 5th of January. So this creates an overlap level, right? This creates an overlap level, which looks to be pretty significant. And it's also a level that aligns quite close to where the 23.6% Fibonacci retracement is. So do take note, I would highlight this as a zone rather than an absolute level with regards to the first support for the dollar index, right? Similarly, for the second support here, second support was previously the pullback resistance level, right? When dollar index was ranging between 102.10 and 102.70, right? So what was previously a resistance level or a pullback resistance is now going to potentially function as a pullback support. So that's why we've identified 102.73 as the second support level. Right, to the upside, we can see price making a pretty decent swing bounce here as well on 12th of December. So finding decent support here before finally breaking through. And what was previously pullback support level could now potentially function as a pullback resistance level, which has indeed what has occurred yesterday, right? So now when price has reacted off this level, this creates an overlap, right? This creates an overlap level, which looks pretty significant. So that's why the first resistance is identified at 103.69, right? Let's tidy that bit up. Okay, so you can see first resistance at 103.69 is a significant overlap resistance. And the next resistance comes in at 104.26. This is a pullback resistance level here. Right, we can see price rising strongly into this level on 8th of December, pulling back, and then trying to break above this on the 11th of December, but failed to do so, and it dropped. Right, so we can clearly see that this is also a significant pullback resistance level. So that's how we've identified the second resistance first and the relevant support as well. So we've also got unemployment claims, right? So we get unemployment claims that are lower than the forecast of 206,000, right? That means this could function as a bullish catalyst for the dollar index. So we could see the dollar index reverse and push higher towards 103.50, right? However, if we get claims figure that is much greater than 206,000, that means that means that more people are filing for unemployment benefits. So that could typically function as a bearish catalyst for the dollar index, and then we could see dollar index drop down to the first support zone. So there anything between 102.95 and 103.05 could be potential support level for dollar index, right? Should claims come in higher than expected. All right, so this is what we have for the dollar index. So now, of course, if you look at the chart for the euro, right, if you see from end of December till now this week, the dollar being in a strong uptrend, dollar index, then of course we're going to see the euro in a strong downtrend as well, right? Which is what we see here, right? Same dates, 28 December till the present time, right? And of course, we can see the consolidation as well. You can see the sideways action. Euro was consolidating approximately between 1.09 and about 1.0995, right? Before finally breaking out of this level. Right. Okay, first resistance is identified as a zone rather than an absolute level. Right. So clearly you can see since 17th of January, yesterday, right, over the last 4 candles, right? So pretty much more than half a day, price has failed to break above 1.0904, right? So you can see that this zone is indeed a significant resistance zone for the euro, right? So this resistance is found by a combination of the 38.2% Fibonacci retracement, right? We started this retracement here from 11th of Jan and ending with the low here on the 17th of Jan, right? So you can see the 38.2% lines up very well with the top of the wick. And at the same time, we see a very significant swing bounce here that occurred on the 15th of December. And this is a very significant swing low or swing bounce, which tells us that this would be a potential support level for the euro, which indeed has occurred on the 3rd of Jan. And even on 5th of Jan, you can argue it's held this level pretty well. And of course, before finally breaking lower. So once this support level gets broken, it could then potentially function as a pullback resistance level, which is what is occurring right now, right? So this is how we can identify resistance and support levels by looking at significant swing lows such as this that occurred on the 15th of December, as well as here, right? This is also a very significant swing low. You can see price falling very sharply, right, from 1.1100 all the way down to 1.0890, right? Before finding support here once, twice, and then of course finally breaking under, right? So we clearly see strong support levels for the euro at 1.0893, which now, what was previously a support level could now function as a resistance level, which is what we are seeing now, currently being played out now together with the 38.2% Fibonacci retracement. Right, to the upside, we also see a pretty decent pullback resistance level here, right? We can see back in mid-Jan, price finding support here on 11th of Jan, then again on the 12th, 14th, and 15th as well. So you can see several instances where price has bounced off this level at 1.0940. So this was previously a pretty decent pullback support level, which of course now with price breaking underneath it could now potentially function as a pullback resistance level. And we also have the 61.8% Fibonacci retracement aligned very well with this level, right? So you can see we have a combination of price action, as well as Fibonacci retracement levels to add significance to these two respective resistances. All right, okay. Looking at the support side, right, so you can see since Tuesday, price has pretty much failed to break under 1.0860 convincingly, right? Of course, we do see the bottom of this wicks here on 17th of Jan going as low as 1.0843. But generally, you can see that the body of the 4-hour candle has failed to break under this level. So that is why I would like to identify this as an intermediate support. And it's highlighted by the dashed green line. I call it an intermediate support because it is not the most significant support level for the euro, but we can clearly see that since Tuesday, this level has offered some degree of support for price, right? Where we do see significant potential significant support would be at 1.0813, right? We can see price making a pretty decent swing high here on 7th of December, then making another swing high on the 12th of December. Price attempted to break above 1.0813 twice, but failed to do so. But on the third attempt, of course, it did. And of course, what was previously a pullback resistance level, right, could now function as a pullback support level. And if you look across it, we also see the 78.6% Fibonacci retracement aligned very well with this first support, right? This retracement was found by starting the retracement, by starting the Fibonacci retracement at 8th of December and ending it with this high on the 28th of December, right? So that's how we using the 78.6% Fibonacci retracement to add to the significance of this first support, right? For the second support, right, we can see price making a very significant swing bounce of this level as well. Price bouncing off 1.0740 once, twice before making this big move up. So you can clearly see this is a very significant swing low bounce, which is why the second support is identified at 1.0742, right? So this is quite likely where price could bounce off as well should it break through all these other levels, right? So do take note, these are the key support and resistance levels for the euro. So similarly, we have unemployment claims coming up. Let's just say hypothetically we get a much lower claims than expected. So that means this is going to function as a bullish catalyst for the dollar index. And also let's assume that we have more Fed officials coming up later today, and they also sing a very hawkish tune. So we could see potential very bullish catalyst for the US dollar. So that means we could see the euro continuing to fall. So if that's the case, we get lower than expected claims. And again, we get Federal Reserve officials coming out with very hawkish comments and statements. Then potentially we could see the euro break underneath this intermediate support and drop towards 1.0850 and perhaps even beyond, right? So do take note how the combination of lower than expected unemployment claims plus hawkish statements and commentary by Fed officials could drive the price of the euro lower. All right, okay. So with that, let's look at the pound. All right, okay. pounds are pretty interesting as well. Okay, I forgot to mention yesterday we had CPI data released in the UK as well. So we had CPI data showing coming in higher than the forecast. So we actually saw inflation accelerate in the UK, right? So with inflation accelerating in the UK, that would typically mean that the Bank of England can't be too hasty with interest rate cuts. It probably has to hold the official cash rate at, I believe it's 5.5%. I believe, yeah, at that rate for longer than expected. So when you have the central bank unable to cut rates earlier than expected due to a potential acceleration in inflation, that's when the pound, that's what would cause the pound to get a significant boost, which is what we saw yesterday, right? So if you look at it on the 1 hour time frame, right, data was released at 7 a.m. GMT time, which showed CPI data or inflation increasing or accelerating in the UK, which is what caused the fall in pound to stall at about 1.26, right? 1.2600, that's where it stalled before bouncing higher, right? So the data point of hotter than expected inflation stopped the fall in the pound and caused it to rebound off this level pretty strongly, right? But of course, we can see it run into resistance here, right? So why is this a strong resistance level, right? Okay, if we just zoom in a little bit, so it's a bit more clearer, right? We can see price has reacted off 1.2695 several times, right? We can see it running to a little bit of resistance here on 4th of Jan. Then after breaking above it, finding support here, 8th of Jan, once, twice, 9th of Jan, and 11th of Jan. So you can see this overlap level being created, right? Price reacting of this level several times. And then once it finally broke underneath it, this level could then function as a potential overlap resistance, which is what has occurred on yesterday, 17th of Jan, as well as a little bit earlier today as well, right? So you can see that this level here still holds significance as a resistance overlap. And it's also has a couple of Fibonacci levels here. We have a Fibonacci. Okay, let me just tidy up the chart first, get rid of the ink annotations, right? We also have a Fibonacci retracement at 50%. How do we find this retracement? We started by using the tool, starting from this high here on 12th of Jan and going down to the 12th of Jan. We can see that the 50% Fibonacci retracement aligns pretty well with the overlap level at 1.2695. We also have a Fibonacci projection level. The Fibonacci projection tool uses 3 points. So we started the first point at 2nd of Jan, going up to the second point here on the 12th of Jan, and ending with the third point on the 17th. So we can see that the 61.8% Fibonacci projection lies in the zone as well between the 50% retracement and the overlap resistance. And you can clearly see here at the top of this wick, clearly stalling at the 61.8% Fibonacci projection, right? Now, of course, because we have a case where inflation could be accelerating in the UK, right? And if we see more like hawkish talk from the Bank of England's governor as well, potentially we could see the pound break above this resistance level here. Now, especially with unemployment claims coming up, perhaps if claims come in higher than expected, that means there's going to be bearish for the dollar. So that could potentially be a catalyst for the pound to break above this major resistance here at 1.26. Basically, it's 1.27, right? 1.27 is the major resistance for pound for now, right? Okay. Then of course to the upside, this is clearly a very strong pullback resistance level here at 1.2718, right? We can see price running into resistance here on the 11th of Jan, 12th of Jan, as well as and throughout most parts of last week, right? Thursday and Friday, 11th and 12th, price failed to break above this level, which clearly signifies a major pullback resistance. Or you could even argue this is like a major swing high resistance, right? Pretty much you can see this strong swing high here take place, although price action is quite choppy on the upside, but you can say that this is a pretty swing high resistance as well, or pretty significant swing high resistance. All right, okay. Now to the downside, let's just zoom out a little bit, right? So you can see here at 1.2612, once again, we see multiple instances where price has bounced off this level, right? We can see it as a support here on 30th of November, 1st December, 4th December, then resistance as well, right? Running the resistance 6th of December, 7th December, 12th December. Then once again, finding strong support here on the 21st of December, and again, massive support here on the 2nd of Jan, 5th of Jan, and so on and so forth. And of course, as recently as yesterday as well, right? 17th of Jan, price bouncing off this level very strongly. So we can clearly see that 1.2612 is a very significant overlap support level for the pound. Right. And of course, the second support is this other significant low here, right? We can see as price fell down from 1st December, it found support on the 8th, bounced a little bit higher, found support again on the 13th before just shooting up, right? So you can see very clearly that 1.2508 is also a very significant support level, right? You can say this is essentially a double bottom here. And when you look at the grand scheme of things, this is also a very significant swing low bounce for the pound of 1.2508. All right. So that is why this is a very significant support level for this for the pound. Okay, so with that, perhaps I will go on to gold, right? All right, guys, do let me know if there's any requests for any currency pairs, commodity, or even the indices that you want me to cover. Perhaps I'll cover US 500 after we do gold. We'll do gold after this. Look at oil as well, and then maybe cover one of the indices, and then before coming back to one of the currency pairs as well. So we'll do a little bit of mix. We'll do a bit of currencies, commodities, and we'll look at the indices as well. And of course, I'm more than happy to go through the analysis with you for any of the currency pairs that you would like to see. All right. Okay. So with with gold, as we all know, generally gold has an inverse relationship to the value of the dollar, of course. So when we see the dollar rising strongly, right, as what we saw from 28 December till present time, right, during this period, we can also expect gold to be falling as well, and then also consolidating here in the first 2 weeks or the first 10 trading days of January before dropping lower, right? So you can see gold typically has an inverse relationship to the value of the dollar. So like we said here, 28th of December, price came down, right? Then gold prices were consolidating roughly between 2015 and 2060 per ounce, right? And then when dollar index broke through that upper resistance, we also saw gold prices break below this major support. So do take note, 2016 was previously a major support level. For gold prices, it was also a level that aligned pretty well with the 61% Fibonacci retracement. I mean, let me just put it back on here just so that you guys can see, right? We had identified this level as a major support level that was also backed up by the 61.8% Fibonacci retracement, right? But of course, now that price is broken below it, we naturally can't use the 61.8% Fibonacci, but we'll keep the 78.6, right? This level here at 2016 was very strong support previously, right? You can see price making a very significant swing bounce off this level here, running into a little bit of resistance here. Then, of course, as it broke above it again, finding support here on 18th of December, and of course, clearly finding support on 8th of Jan, 11th of Jan as well. So you can clearly see that this level did offer a lot of support in the past, but now, of course, with dollar index breaking higher, gold prices have fallen through this major support level, which is why we have now identified it as the first resistance, right? This is the first resistance. This is the first resistance for gold at 2016, okay? All right, okay. Let me see, I'm just checking something here. Sorry. What is this? Okay. Right, okay. Sorry, just I thought there was something coming in here on the oh sorry, there is, yeah, there is a wait. Okay. Hi Makuta, you have raised your hand. I'm trying to see if I can do you have a question? Could you type it in the chat box? I do see you have raised your hand. Yeah, please do type in the chat box here, the webinar chat box. All right, hi Makuta, please do type here or in the Q&A chat box, right? Yeah, I thought I did see something here. All right, great. Why is Palladium not responding to the news? All right, okay. I don't really trade Palladium, but we all know, I do know a little bit about it that Palladium is used, it's a high value industrial metal, right? It's used in a lot of auto manufacturing and in other in similar industries as well. Especially it's sought after uh in the auto industry. But part of the reason is I believe I'm not too sure, but I think there has been probably lower demand for vehicles, right? Vehicles as a whole, right? Just looking as a whole, I'm not talking about any particular sector, manufacturing sector, with regards to automotive manufacturing, whether the US, Europe, right? But I think there has been a general slowdown in vehicle growth, which is why probably we are not seeing palladium respond in general, right? So I believe prices in palladium are more supply demand driven, especially related in relation to the auto manufacturing industry, right? We can do I'll take a look at palladium after this as well, right? Let's try and look at the symbol for the ticker for palladium and see what we can get, right? All right, okay. So with gold prices, right, so gold has broken through this previously significant support, which is where we have identified 2016 as our first resistance. Second resistance is at 2060 pretty much. We can see this is also a very significant overlap level, right? Price bouncing off this level here on 29th of December, and then again on the 2nd of Jan. And once it broke under, we can see clearly running the resistance on the 5th, and on the 12th of Jan as well as 15th of Jan, right? So multiple instances where prices reacted off this level to tell us that this is a very significant overlap level, which is why we've identified it as the second resistance. And also is another level that it's also another level that aligns very well with the 61.8% Fibonacci retracement, right? So we started this retracement here from 28th of December, ending with 17th of June, right? So we do see that this retracement level aligns very well with the second resistance as well, all right? First support is a pretty decent support, right? Is not the best, but we do see an overlap level here, right? Price finding support on 8th of December, then resistance on the 12th. And this is also a level that aligns very well with the 78.6% Fibonacci retracement, right? And so that's why if I highlighted it as a zone rather than an absolute level, right? We can see price bouncing off 2005 recently. So we have a pretty decent support between 2005 and 1997 here. Now, second support at 1976, right, is very clearly a very significant swing low here. We can see a very significant swing low price action here. You can even argue there's a double bottom here on 11th of December, 13th December, before price bouncing higher, right? So that is why gives us the confidence that this is a very significant support level at 1,976. And that is why we've identified it as the second support, right? Okay. All right, let me take a quick look at palladium. Let's try and bring up, I wonder what it would be here. Palladium. All right, we just use the futures contract here, right? We just use the futures contract for palladium, right? Okay, let's just take a quick look on a weekly chart first to see how it's been trading, right? So you can see we had a strong run up pretty much since end of 2018 all the way before COVID, right? We saw a very strong bullish trend in palladium. Then after that, of course, we had a big correction in prices. Then we saw it push up again in 2021 for the first half, and second half it dropped again. So you can see it's the longer term trend. Well, we've seen a combination of strong bullish trends, bearish trends, and now since 28th of Feb. So for almost 2 years, you can say for nearly 2 years, palladium has been in a strong downturn, right? So when you see a strong trend, downtrend like this, bullish trend or bearish trend in this case, that means there is a significant supply and demand fundamental story to the price of palladium right now. Like I said, palladium is still a very important metal that is used by the auto manufacturing industry, but I think we need to perhaps take a deeper look into why, on a fundamental level, palladium prices have pulled back very sharply, right? It could also be a case of new supply coming into the market. Perhaps there are more mines and we have a greater supply of palladium entering the market while we see demand pulling off, right? It could be a very simple situation such as that. But generally, we can see for almost 2 years now, palladium has been in a strong downturn, right? I can even see here, from here, we have a very decent I could even say there's a very decent bearish channel, right? Let me see. I think there's a case for a pretty decent bearish channel here. Oops, hang on. Where is my, oh, here we go. Right, we can see there's probably a case for a very strong bearish channel as well. Yeah, pretty much on a weekly basis, you can see that price and has been dropping like a rock pretty much. And this is probably a major support level here, right? We can probably see this price level here. Right, price making pretty finding support here back in August of 2018 at 894 before bouncing higher. And once again, it has bounced off this level for now. It has temporarily found support here. So let's just identify this as the first support. And all right, with that, let's go on to the daily time frame and see where price is currently trading as well, right? So even on the daily time frame, we see quite clearly that price is trading in a very strong downturn, right? And I can probably do a Fibonacci retracement from this swing high here, 4th of October, going down to this recent low on the 17th. Let's pull up all the fibs. Let's see what we get. Okay, even before pulling up all the fibs, the first resistance for me, right, will clearly be around here, which is the upper trend line of the bearish channel, as well as price making a significant swing high here as well. We can see this price level here as the first major resistance for palladium. Now let's pull up all the fibs and let's see what we get. Right, we can also see that this swing high resistance here that occurred on 19th of December last year also aligns very well with 33.6% Fibonacci retracement. And you can also see here in the past price finding support here, right? You can even argue that this is a pretty decent overlap level here, price finding support here from 28th of June all the way till the end of September, right? For over 3 months pretty much before breaking lower. And as it came up, it ran into resistance over here. So what was previously a pullback support level then functioned as a major pullback resistance level as well. All right, hi. Thanks for the kind words. Sorry, anonymous attendee. Thank you very much. All right. Okay, so with palladium, right? So we do see, I do see 894 as a very strong support level, right? When you look on a weekly basis, going all the way back to the August of 2018, this is indeed a very significant support level for palladium, and we could potentially see price bounce higher as well. All right, so first resistance is clearly here on the daily time frame. So let's just tidy this up and just keep 23%. And also when we zoom in a little bit, we can also try and find perhaps more something a little bit more actionable in terms of levels. We can use a retracement level here from 22nd December down to 17th of Jan, right? Perhaps this price level here does look like a pretty decent overlap as well. Right, I'm going to label this as an intermediate resistance, right? We can see price finding support here on 23rd of October, and once it broke lower, it ran into resistance on 21st November as well as 20th of November as well, so creating a pretty decent overlap resistance level. Now that should price come back up, perhaps this could be the next resistance area as well. Okay, with that, let's quickly see Where are the other retracements? All right, so we do see 50 lining up quite well with this overlap that we seen earlier. And we do see price finding a little bit of support here on 11th of Jan before breaking lower. So perhaps 23 and 50% price could find a little bit of resistance around these levels, right? 23%. And of course, at 50%. So do take note, we could see palladium prices bounce quite strongly off 894, but where it could run into resistance would potentially be around 988. And also, again, if it breaks above 988, probably about 1090. So, right, so do take note, these are some of the key support levels and resistance levels for palladium. All right, okay. If not, let's move on to oil, crude oil prices. So I'm going to use WTI. Right. Okay. So let's go. Right. Okay. Since we're on a daily time frame, we can see that since 29th of September, price has indeed been in a strong downturn, and since December, prices have consolidated, right, finding strong support around $69 per barrel, $69 per barrel, and we can say it's sort of ranged between $69 and $75 since the beginning of December, right? So on a daily time frame, I would say crude oil prices, specifically WTI oil, has we're experiencing sideways trading or range bound trading. There is nothing really moving this commodity in either direction, right? Not like what we saw earlier in 2023, right? We saw a very strong bullish move from the end of June all the way up till the end of September. Then since then, we saw prices fall very sharply till the beginning of December, but otherwise, we don't see any major bullish trend or bearish trend. There's a lot of neutral buyers, right? We see neutral buyers for oil at the present being roughly trading between some with WTI oil trading roughly between $70 and $75 in the range. So that's it. That doesn't mean you can't trade oil, right? You can still play the range, right? In this type of situation, once you have identified that price is indeed trading in a range bound market structure, we can play the range as well, right? So basically, we're looking to short the resistances and go long at the support levels, right? Okay, so let's go in on the 4-hour time frame and try and identify some of the major support and resistances. All right, clearly here at $73.12 per barrel, we can see price running through resistance here on 16th of Jan and as recently as today as well. Of course, we have the wicks going well above the resistance, but I'm just using the body of the candle here to mark the major to mark the resistance. Right. Similarly to the upside again, we do see where price could run into resistance would be around the region of the 78.6% Fibonacci retracement, as well as this level here that occurred on 5th of Jan, another swing high or pullback resistance level. Right, to the downside, we can see price making a strong bounce off $71 per barrel, right? You can see price making a strong bounce here on 10th of Jan, and as well as yesterday as well, right? So two pretty strong bounces here, which tells us this is a very significant support level for WTI. And of course, the next support level would probably come in around here. You can see price falling very sharply to about $69.80 per barrel on 3rd of Jan before bouncing strongly off this level, right? So what we're looking for is significant swing lows such as this or significant swing highs such as this here. We have a very significant swing high here as well. So we're looking for this type of market structure to help us identify significant support and resistance levels. Right, so oil has been ranging, as I said. So in this type of scenario, we could potentially play the range, but do take note because of the ongoing geopolitical tensions in the Middle East as well as the Red Sea. Any escalation in this region, in these two regions, could potentially cause crude prices to spike higher. So do take note, although price has been relatively ranging between $70 and about $75. Do take note, any major escalation in that region could cause crude prices to spike. All right. Okay. So we've had the major levels for oil. I think we can also do a Fibonacci projection, right? A projection involves 3 points. So we'll start the first point here, 16th of Jan, going down to the second point, 17, and ending here. We do see this. So what we're trying to project is we're looking for, well, prices come down as bounce higher, and should price continue to fall, what the Fibonacci projection tool does is help us to identify a potential support level. So the first support level could come in at 61.8% Fibonacci projection, or the 78.6% projection, which is all right, they do not lie very well with our first support, but it can see it is within the zone of where the first support is. So that's how we can use the projection tool to identify potential support should price continue to drop lower from this point onwards. But for now, we don't really see price pulling back. So let's just get rid of the projection, but it's something to take note of. So if we do see WTI oil react strongly off the first resistance and continue to fall hard, then we can definitely use the projection tool to help us identify a pretty decent support zone for WTI oil. But for now, there's no real need for it. So let's just keep it nice and clean here. All right. Okay. So that's what we have for crude oil, right? It's pretty much ranging. But of course, you could potentially play the range here, right? You can potentially open a short position for crude WTI at the current price at about $73 per barrel. And if you do not wish to run a very high stop loss, right, you can put it just slightly above the top of this wick here. So perhaps maybe about 73.40, for example, if you do not wish to run a very tight stop. You could have a potential short position here for WTI oil. But like I said, do take note, any escalation in the Middle East or the Red Sea is likely to prop crude prices higher. Okay, so with that, let's look at the indices. All right, let's go on to the indices. Let's look at the US 500. Right, let's just do it on the daily time frame so we get to see how price is currently trading as well. Right, so if we zoom out a little bit, going back to was it December of 2021 and January 2022. So this is where the all-time high for the US 500 was made. Do take note, this instrument, US 500, tracks the S&P 500 futures, not the index itself, is tracking the futures price. But nevertheless, do take note that this is the all-time high over here at 4,817. Right, price is currently trading very close to this level, right? It has attempted to come very close to this level here, but it has failed to break out. So that's why we've identified the first resistance at 4,794. Let's see, there's a Fibonacci retracement that we can use for the support. Let's see, where's the all-time high? Probably right here. Do we have, all right, we do see the 23. Okay, we don't see any other retracement levels for now, so let's just get rid of it. Right, okay, so we can see how the US 500 has bounced very strongly over the last 6 months and is running to resistance where the previous all-time high was as well. Okay, hi Linda, if you have any questions, right, please drop them in the chat box or the Q&A box as well. Please, yeah. All right, okay. All right, thank you, Danelle. All right, so Linda, if you have any questions or requests, please do drop them in the Q&A box or in the webinar chat box as well. All right. Okay. Let's see. Okay, let's go back onto the 4-hour time frame now and try and see how did we identify the support levels as well. Okay, so let's just zoom in here. Okay, so as I mentioned, second resistance is the all-time high for the US 500. First resistance is at about 4,794, where we can see price has run into resistance several times here. So I would like to highlight it as a zone rather than an absolute level, right? I just highlight it as a zone in an absolute level. All right, yes. Okay, I'll be more than happy to do US 30 after this as well. We got time, so let's quickly do that as well. All right, Makuta, you got a question on unemployment claims. It all depends, right? Because we've seen recently, tech companies as well, Amazon and a few others as well, announce new round of cutting measures, job cutting measures, right? So do take note, we could see perhaps unemployment claims pick up over the next 1 or 2 weeks, but for now it does seem to be trending lower, right? So we do have to look out for any announcements by any of the major companies in the US with regards to job cuts, and that could potentially impact the level of the unemployment claims. Did we do gold? Yes, we did do gold at the start, not at the start, but somewhere in the middle. All right, Donald, we did do gold somewhere in the middle, so I don't think I'll have time to do that once I cover US 500 and US 30 as well. All right. Okay. All right, let me just quickly round up US 500. Okay, so we've done a Fibonacci retracement as well here. Started this retracement from 5th of Jan going up to this high here on the 11. We do see the 50% Fibonacci retracement here. But of course, price breaking underneath it. This was previously the first support was here because we did see decent pullback support at this price level where the 50% is. But of course, with price breaking underneath it, the first major support is now here. And is there any 60% Fibonacci that we could use that aligns? Yeah, okay, so we can see that we have the 60% Fibonacci now aligning with the first support here. Right, and of course, the second support is at 4,679, and we can see price clearly making a very significant swing low bounce off this level. So that's how we've identified the second support. Right, so first and second resistance is pretty straightforward. First support is now here. We also, what is this? We also have a Fibonacci projection. So we're using this points 1, 2, 3. So as price was falling down, we use this projection level at 61.8% to try and determine where the next support for price would be. And indeed, it has bounced off the 61.8% Fibonacci projection as well. As well as the 61.8% Fibonacci retracement. All right, okay, I do have time for the US 30, so let's just quickly do that. The US 30 here, the instrument that I'm using here would be DJ30, which is basically the Dow Jones. Similarly, the first support for Dow Jones was at about 37,250, but with that being broken, we can see the next support. I would probably use this swing low here, where you can see price bouncing off this level on 14th of December, 20th of December, as well as here very recently as well. Second support, I'll just clear it out for now. So the first major support for the Dow Jones or US 30 is at 37,154, right? Very significant bounces off this level. First resistance is this pullback resistance level here, right? We're going to have to adjust this retracement now to a new low, right? We can see price bouncing off this level here several times, 9th of Jan, 11th of Jan, as well as 12th of Jan. So what was previously a pullback support level could now function as a potential resistance level, which is also a level that aligns very well with the 38.2% Fibonacci retracement. All right, I'm going to get rid of this. Oh, this is a projection, I believe. Okay, that was a projection. This is my retracement here. Okay. And of course, the second resistance for Dow Jones is the all-time high. Right? If we just quickly zoom out onto the weekly time frame, we can see Dow Jones has made its new all-time high very recently at the beginning of the year. Right, and price has failed to break above this level now twice. Right, so that's why the second resistance is at 37,800. Okay, so do take note, these are the key support and resistance levels for Dow Jones. We do see price finding strong support here, and we may end the week on a positive note with regards to US indices. Right, we may see Thursday and Friday the major US indices bounce higher to end the week probably on a slightly better note. All right, okay. We've come towards oh yeah, this I've already answered your question, right, Alinda? That's right. Okay, I'll just lower down your hand. Just okay, on a weekly basis, yes, the Dow Jones and the US indices are quite likely to notch its second weekly loss in 3 weeks. right? Second loss in 3 weeks. That's pretty clear. But we could see equity prices in general, at least on Thursday and Friday, perhaps edge a little bit higher as well, because we do see this is to be a strong support level, at least for the Dow Jones as well. We could see the Dow Jones perhaps edge higher today, as well as on the final day of the trading week. All right, okay, so we've come towards the end of today's webinar. Right, thank you all for tuning in. I'm just going to launch a quick poll. Really appreciate it if you guys can give your feedback as well. Thank you all for tuning in, and really would appreciate your feedback as well with regards to today's webinar. So do take note, we've got unemployment claims coming up later today. We've also got UK retail sales coming up tomorrow at 7 a.m. GMT time as well. All right, I'll just leave the poll running for a little bit longer. All right, okay. With that, I thank you all for tuning in today. Do look out for all upcoming webinars by IronFX. And how will the market react? All right, Makuta, okay, with regards to the dollar index, I'll just quickly, all right, just let me quickly end the poll. Hang on, just let me quickly end the poll. And then I'll just quickly run through how. Right, so let's just quickly switch back to the slides. Right, so we have US unemployment claims coming up later today, 1:30 p.m. GMT time. Last week's number was 202,000. The forecast for this week is 206,000. But do go on to Forex Factory again to make sure that they've not changed the estimate. I've had this from yesterday, I believe. So do take note, the forecast sometimes can change, but do take note, it should be 206,000. So what this means is if claims comes in more than 206,000, that means there are more people filing for unemployment benefits. That means the US labor market could potentially be showing signs of slowing down. That means that this could then translate to be a bearish catalyst, potential bearish catalyst for the US dollar. So that means Euro, Pound, Aussie, Kiwi, and gold could all potentially rise. Conversely, if claims come in much lower than the estimate of 206,000, that means there are less people filing for unemployment benefits. That translates to the US labor market still being resilient, still being strong, and that would mean this is bullish for the US dollar, potentially bullish for the US dollar, and thus currency pairs such as the Euro, Pound, Aussie, Kiwi, and commodities such as gold are likely to fall as well. All right. That's right, Donald is absolutely right. Yeah, so if there is an increase in claims, no, if there is an increase in claims, gold and the other currencies will be bullish, right? If claims come in more than the estimate, if claims come in more than the estimate, this is bearish for the dollar, and that means Euro, Pound, and gold will be bullish, right? Do take note, right? If the claims number comes in higher than the estimate, this is bearish for the dollar, but of course, then bullish for everything else, okay? All right, thanks everyone for tuning in. Hope you have a great trading week, and I'll catch you all at the next webinar. All right, take care, and have a great trading week. Thanks all. Most welcome, Donal. All right, thank you. Most welcome. All right, take care, guys, and have a great trading week. And of course, enjoy the weekend as well. All right, it's coming up very shortly. All right, take care, everyone.